Well, the thing is that right now, they've only said that the JTC is going to meet today and tomorrow, but they actually haven't said anything about an actual cut. They've only said that we are there to stabilize the market. I think at this point, the market is already anticipating some sort of cuts, and I think that's why the prices are not falling so much today. But it's true that at this point, if the demand actually does fall, continue to fall in China, a cut of 500,000 barrels per day may not do a whole lot to push prices up in the short term. And depending on how long the virus lasts, by the time they cut, the demand could be recovering, and it could be a timing factor. Yeah.
Right. We of course saw prices falling by more than 3% or almost 3% in the overnight session, despite the fact that we did have some of these reports and this jawboning out from places like Saudi Arabia being reported by ourselves and in the Wall Street Journal as well, that there was going to be a significant cut, yet we still saw prices falling. So you would really have to think that perhaps the oil market is suggesting that the impact of the coronavirus is actually going to be much more significant than anything that OPEC can do to, I guess, right the ship.
I think so. I mean, the one thing that OPEC cannot have a lot of control over is demand. I mean, they can control the supplies, and even if they continue to cut, if demand continues to fall, then there's really not a lot that they can do as producers. And the expectations right now is that with Chinese refiners already cutting some of their refinery runs, there's it's sort of like there's no indications of how much the demand fall is going to be and how long it's going to last. So I think that, but having said that, I think that just the indication from OPEC that they are ready to do something, I think that has provided support to the market. Otherwise, I think that we'll be falling a lot more.
Okay, Dan's got a question for you.
Hey there, Azlin. So it does seem like now the pressure is on because this perhaps cut appears to be starting to get baked into the cake. I wanted to bring you across some commentary that we got yesterday from Halima Croft, the head of commodities research at RBC. Of course, quite a well-respected OPEC insider. She's one of the only few bank analysts that actually attends the OPEC meetings. She says, I think this is a go big or go home moment for the organisation. Halima also saying, if you're going the route of an extraordinary meeting, you'll have to come up with a substantial reduction in order to prevent the market from further tanking. Now, she suggested to us that OPEC could cut in the order of up to 1 million barrels, as Matt was indicating before. But what is the risk now, Azlin, if OPEC doesn't cut production?
I think that at this point, because where we're seeing the oil prices, because of the expectations and the news, the market is, to some extent, I think, factoring some sort of additional cuts from OPEC and a meeting in February rather than in March. I think that if they do not do anything, we could see prices continue to fall. But it's true that at this point, OPEC probably needs to make a big announcement if it wants to push prices back up. We're already like just above $50 for WTI, and we've fallen like about $8 over the last couple of weeks. So if the aim is to push prices back up, then I think that they would have to make a very big gesture, potentially 1 million barrels per day. But, I mean, having said that, as I said, we really haven't seen any clear indications from Saudi Arabia or from OPEC itself that they would cut or how much they would cut.